the real estate market is at risk of a bust, is what you told me. So at least the boom is over. Can you elaborate on why and how you feel about the real estate market across the country right now?
Well, there's a few reasons why we've had a boom in real estate. One certainly is low interest rates. One is lower input costs, at least in the past. The other is what I call the Great Migration, and I had predicted this many years ago. I wrote about it. I spoke about it, there was only a point to which people would continue to pay high income taxes and high real estate taxes in a lot of cities and states. Frankly, it gets to the point where it just didn't make sense to live in some of these states. And I mentioned before that, New Jersey's largest export is millionaires. Well, the same thing could be said for New York and California. We live in Henderson, Nevada, and if you drive around Henderson, Nevada, you see a lot of California license plates. And these are people who have left California and have moved to Nevada. Same thing in Arizona, where my daughter lives. There's a massive migration going on. People are flooding into Texas, Arizona, New Mexico, Nevada, Florida. They're leaving New York, New Jersey, Connecticut, California, Illinois. And part of the reason why they're leaving is because income taxes are too high there. Part of the reason they're leaving is because real estate taxes are too high there. And add on to that, a lot of the social unrest that I talked about in the first part of the interview. People are saying, we've had enough. All right, you know what? I can run my business from home using Zoom, using other technology, the internet. Do I really physically have to be in New York City? I've spoken to a lot of attorneys and accountants, people who, when you turn back the clock 3-4 years ago, they rented out several floors of some very nice real estate in Manhattan. Well, they no longer need 20 floors in these buildings anymore. Now they maybe only need 10 floors. All right. Maybe they only need a few people to man the phones in offices, and maybe the partners, have to come in once or twice a week, and maybe some of the associates have to come in 3 or 4 times a week. You don't need all this expensive real estate. And to what extent can you relocate people for less money to other places, to Pennsylvania? People are leaving, for example, Long Island, and I know about this because my wife and I, we own a house up in the Adirondacks. People are selling their homes in the New York metropolitan area, selling a home for $750,000 and buying a beautiful home up in the Adirondacks, in Queensbury or in Saratoga Springs for half the price, and living a pretty good life there.
Yeah.
And putting half the money in the bank and not have to pay some of the real estate taxes that they paid in Long Island or in New Jersey. It's happening. It's palatable. You see it happening. But I think the problem is that a lot of politicians just don't want to admit to it. And the proof's in the pudding. If you just look at the recent census results, and if you look at obviously what's happened in terms of some states losing representation in Congress and some states gaining it.
All right, so Scott, let me just try to understand and unravel what you just said here, and correct me if I'm wrong. So you're saying the housing market is in danger of a slowdown in terms of demand in the metropolitan areas, whereas because we have seen a huge spike in prices in the suburban areas for exactly the reasons, the migration reasons you stated. So we're not going to get a huge crisis like the subprime mortgage crisis of 2008, right? We have totally different issues today. Is that what you're saying?
To a great extent, we have different issues. Yes, there are a lot of marginal buyers today who are relying on lower rates of interest. And they may get squeezed out, or shall I say that the next marginal buyer may be squeezed out. But I don't think that we're going to have the type of subprime problem that we had 2 decades ago. But I definitely think that what we're going to see is we may get to the point at which the amount of defaults on mortgages may increase. But more importantly, I think the ability for people to be more mobile than they have been in the last few years is gonna decline, and so most of that migration may have already taken place, except for the millionaires who basically are going to make that decision on a year-to-year basis. Most of the millionaires will leave at the end of a calendar year. So we got a few more months until people start leaving again at the high tax brackets. But for the most part, for the people who've left Manhattan and gone to the New Jersey suburbs, or people who have relocated from Hoboken into some of the some of the New Jersey suburbs, because they're starting families, that I believe is slowing down. And if interest rates rise and the cost of building new homes goes up, then I think you're going to see a slowing down of that. But it doesn't mean that the migration is going to end. It's just going to slow down.
So you wouldn't recommend to your clients or your friends or family to buy real estate as an investment right now, whether it be residential or commercial?
I would not, especially commercial. As a matter of fact, I owned a commercial property that we sold within the last year. No, I think having commercial properties, whether it's office or whether it's retail, I think is in for a world of hurt in the next few years. You have to remember, especially some of the larger real estate operators, they are very sensitive to interest rates because they are highly leveraged.
So let's talk about. Sorry, go on, please.
No. That and so your ability to leverage diminishes as interest rates go up. We've basically been hooked on low interest rates for a considerable amount of time, and if inflation rises, then the offset to that is going to be higher interest rates, and we're going to have to get used to that, which means that real estate operators are going to have to readjust the way in which they operate. And how do they do that? Well, they either have to borrow more money, leverage up more, they have to pass on their increased costs, which is going to be hard because occupancy rates are down. And so, there's going to be a shakeout, I think, more on the commercial end than there is going to be on the residential end in the next go around.